Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, last week you introduced the Ningen project of Scandium International Mining Corp as a discovery to watch. Since Trump's victory, gold has lost over $100 and is now threatening to break through $1,200 on the downside. The downtrend for resource juniors that started in mid-August has worsened during the past week. And yet, since we talked about Scandium International a week ago, the stock has jumped 60% from 15 cents to 25 cents. Have there been any new developments, or is there a bigger picture starting to unfold?
Well, yes, Jim, the market has been pretty lackluster in general, but in the past few days, Scandium International has started to break out. In fact, as we speak, it's trading at 27 cents. As disclosure here, this is a stock that I do own a fairly good position in. It is one that my readers own. I have been recommending it for the past 3 years. It's been a long, tough years. And finally, yes, fundamental developments are coming together, and there is also a bigger picture that's starting to kick in. But first, the fundamental development. The day after we talked last week, the company announced that it had received a development consent from the New South Wales Minister of Planning and Environment for its 240-ton per day Ningen Scandium mine. Now, this process is a key threshold, a key milestone. 12 government agencies go through the environmental impact statement, and when they recommend it be submitted for the mining lease application, that is a big step. The next couple steps are a few more licenses, of which the most important one is the mining lease. I was just in San Francisco moderating a 2-day conference where George Putnam of Scandium International presented to an audience of fund managers and institutions, and I was quite surprised. He continues to insist that it is possible that a mining lease could be obtained before the end of the year, and he did concede that in mid-December, the Australian bureaucrats all go on holiday and don't come back until mid-January. So we will either have a mining lease in early December or sometime in the new year in mid to late January. And the mining lease is very important because that will kick off the need to raise construction financing.
The feasibility study indicates it'll cost nearly $90 million US to build the world's first primary scalable scandium mine. Once Scandium International has its mining lease, the company will have to raise about 100 million Canadian for its 80% share of the project. How's it going to do that?
Well, the first thing that has to happen is once they have a mining lease, they give their 20% partner, Scandium Investments LLC, 30-day notice to decide whether they wish to convert their 20% interest or part of it into a company equity interest or pony up their 20% share of capital costs, which would be about $20 million. Now this is a significant thing because the Scandium Investments LLC is controlled by a family that has a very substantial track record. They are still requesting that their identities be kept confidential. However, by Googling the company name, you can pretty much figure out who it is. One of them is the CEO of a company that does $2 billion in revenue, and he just gave notice that he's going to retire at the end of January. He was responsible for building this thing from a much more modest company into its current size. And the other partner in there cut his teeth at Drexel Burnham during the 80s, was the founder of a $20 billion hedge fund from which he just retired. And so both of these are sort of just a little bit more than a half century old, effectively my age. And I have a feeling that they are going to play a significant role, whether they pony up the $20 million or convert their stake into what would end up being roughly a 20% shareholding in Scandium International, about 50 to 60 million shares based on the 225 million shares issued right now. And that would make them the biggest shareholders in the company. So a big question that the market is contemplating is if they do this, and these people with all their Wall Street M&A expertise and so on, is this going to take the company to an entirely new level?
How can a mining project be a growth story? Is the Ningen Scandium mine not the equivalent of a 50,000 ounce per year gold mine?
Well, this is what makes this story so interesting. These deposits that have been found in New South Wales are a game changer for the entire scandium story. Scandium is an element that does fabulous things to aluminum, but it generally does not concentrate well in the earth, and when you do find it, it is very expensive to get out. These deposits that have been found in New South Wales, and there are others, not as advanced as Ningen, they are at a grade where it is actually feasible to produce this stuff, make a profit selling it at $2,000 per kilogram. And the resource at Ningen is about 30 times bigger than what they are proposing to mine in their feasibility study that they published in April. So in this case, usually when you build a mine, you figure out what the resource is, and you optimize a mining plan to deplete the deposit as efficiently and profitably as possible. In this case, we have a global market for scandium that's only 10-15 tons, not because that's all the world wants, but that's all that is possible to come from all these byproduct sources such as in situ uranium operations and rare earth products and projects and titanium dioxide waste stripping operations. So the story here is, if you build a supply, will the demand come? And if the company is successful in attracting orders for its 36 to 42 tons of scandium oxide, it will be like unleashing a tsunami of demand from sectors such as the automotive and aerospace sectors as they all come in. So the company simply needs to expand its existing production infrastructure. And I've done some modeling. I published that on Sunday night, where I show how, with a cost of, say, extra investment of 60 to 70% of the initial capex, you can double the output, say, by year 5, and then you could double it again maybe by year 10, where you're ending up producing over 100 tons of scandium oxide per year from this deposit, and you're still not depleting the deposit. So it is a growth story in the sense that you don't need to find a new 50,000 ounce per year deposit and put that into production. You start with the equivalent of a 50,000 ounce deposit, and you build it up to a 200,000 ounce per year deposit simply by developing the market, the demand for the product that you are producing. And in the numbers that I crunch, I could see that if they were to finance at 40 cents, raise $100 million there, the stock could support a $1 to $2 price range. And people have been wondering, well, how do you get all this money into a junior all equity? In these times, everybody is yield hungry. Everybody is looking for a growth story. If the growth kicks in, the growth will be funded internally from cash flow. Then you're looking at a possible $2 to $4 price target in 5 years rather than just in 3 years in the expanded scenario. So people are starting to understand this growth internally funded nature, and this stock will soon shift from being a retail audience followed stock to one that has an institutional audience clamoring to be part of the big capex financing, which would be sometime in Q1 of next year.
So the move is mainly linked to growing confidence that the Ningen Scandium mine will become a reality?
To a large degree, yes, but there's also a bigger picture thing evolving. And I, for the past couple years, have said, well, we're in a terrible bear market, have no idea when it's going to end. At the end of January this year, it appeared to end. We had a fantastic rally. Those who were still on board stocks did quite well, but it stalled in August. It was very much linked to the price of gold. Since then, gold has slumped. So as we mentioned earlier, it's threatening to drop below $1,200. The scandium story is independent of whatever it is that gold does. It's really a story about enabling aluminum to do far better than it is capable of doing with any of its existing alloys. And it's sort of basically what makes aluminum scandium important is that anything that moves or lifts or rises, weight is an issue. So trains, cars, boats, airplanes, all these things, they want to be lighter. Now, in the age of renewable energy, you would think, okay, this is good, this is important, we save fuel and so on. And of course, you have the Trump victory here, and you're thinking, okay, here's a guy who does not have any scientific intelligence, who thinks climate change caused by human sources is imaginary and so on. And he's got foreign policies that could end up disrupting the Middle East oil supply. We could end up seeing $100 per barrel oil, which is actually good for America because at that price, shale oil development is very sustainable. So the desire to have lighter vehicles is something that's agnostic as far as the source of the fuel. You just want to have your fuel consumption costs as low as possible. And if Trump also pursues his infrastructure dream as part of getting America out of its funk about feeling sorry that it appears to be not as great as it used to be, or at least on a downtrend in terms of greatness. If you come along with a story like, here's something new that's never existed before, let's build stuff out of aluminum scandium, here's a magical transformational metal, and there's a potentially unlimited supply of deposits, these new deposits that have been discovered, then you could potentially even see a mania develop for the Scandium story. So, yeah, people are starting to sense this aluminum Scandium scenario fits in well with where the United States is probably going to go in the next while, even if it is on a negative track where there's all kinds of global disruption and energy prices go through the roof, or if a more positive track gets developed where infrastructure buildup starts to happen.
Discovery Watch with John Kaiser. We'll be back right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. Serengeti Resources published an updated resource estimate for the central zone of the Quantica project earlier this week. The stock has since gone down. Was the news bad, or is the market simply not paying attention?
Well, I think it's more of a case that the market is paralyzed with fear. We've seen stocks that were hanging in there. They retreated from their mid-August highs, had retreated somewhat, but now we're seeing a lot of stocks with kind of like dangling cliff-like legs, and this type of environment, new money does not want to come in. In the case of the Quantica resource update, it was an improvement in grade. It came from insights that the POSCO Daewoo people, who spent 2 years doing due diligence on this project before finally doing a deal earlier this year, insights that they provided that became the basis for drilling a hole at a different angle than all the holes had been historically drilled, for coming up with the realization that maybe we have understated the gold and copper grade potential of this system because of the assumptions we made about the orientation of the fabric of the mineralization. And so this upgraded resource is a vindication of the Daewoo's interest in the project. And the company is now going to do a revised PEA, which it hopes to have out in the first quarter of 2017, which optimizes these insights and I believe does away with the southern pit. It's going to still be a combination open pit and then underground mining of the higher grade core that's within this system. And of course, the market wants to hear that POSCO Daewoo is going to take the next step of the option, which will commit it to spending all of $7 million to earn at 35%. They don't need to do that until March, which is about the timing of the PEA. I would say that for people willing to ignore the general market funk, this news release is actually a reason to start accumulating the stock in preparation for a much better uptrend in 2017.
John, copper had a crazy couple of weeks, trading as high as $2.75 per pound this week. This should be good for copper optionality plays like the Serengeti's Quantica. Why is the market not responding in a positive manner to copper juniors?
Well, everybody was pretty much surprised by copper's breakout. Copper spent most of the year languishing in the 2 to 220 range. The stocks in the warehouse are still fairly high. They have retreated from their peaks from a year ago. But what has happened is that Chinese speculative capital, which has cranked up other commodities such as iron ore earlier this year, which completely surprised everybody, made no sense. Metallurgical coal got cranked up. It has been roving around buying these commodities, and they seem to have about 3 weeks ago, started moving into the LME metals such as nickel and copper. And there was big LME week conference about 2 weeks ago, during which a fair bit of buzz developed that it's time to start taking the base metals seriously again, to get positioned and all that. But the speculative buying pushed copper through technical limits that caught the shorts offside, that caused algorithmic trading to kick in, which is why we saw it spike as high as $2.75. Eventually, we will see sustainable $3 copper, but we are not there yet. And so the investor audience out there that's been following this space and understands sort of the funk everything is in, they have preferred to stay on the sidelines with regard to the juniors, that they don't believe that this has any staying power, that copper could end up back at 220. We need to see copper sustained in the $2.50 to $3 range for some time. Keep in mind, too, that between 2003 and 2006, copper went on a tear, and everybody believed it was just some sort of market manipulation. Even the mining companies, they didn't really start to appreciate the China supercycle story until about 2006, when they finally stopped forward selling copper. Right now, I would say people are forward selling copper because they just don't believe that this is any sustainability. However, one of the themes that I have been talking about a fair bit in the wake of the Trump victory is that the policies he is capable of unleashing could have the consequence of disrupting supply from various parts of the world. So it isn't going to be aggregate demand growth which overwhelms the existing supply infrastructure for metals like copper and nickel. It's actually going to be disruptions because of geopolitical conflicts, international conflicts, pushing matches between the American superpower and the wannabe superpowers that could end up creating within the markets that are still world markets, could end up resulting in significantly higher prices for metals that make no sense in terms of your supply-demand dynamics. Zinc is an interesting metal too. The Chinese traders do not seem to have fully invaded that one yet. That's one where I believe the supply and demand dynamics are far more realistic, and we are starting to see the money creep into the zinc juniors, because the market is much more confident that zinc has a supply problem that is going to result in higher prices.
Wesdome Gold reported more high-grade results from its Kena project in Quebec, but the market seems unimpressed. Were the results disappointing, or is it more of a result of overall bearishness with regard to gold?
Wesdome I adopted as a spec value hunter recommendation in early October, after I sat down with management and reviewed the results that came out in early September, which were spectacular 1,200 gram per ton intersections in a complex that has averaged only about 4 grams per ton, and where such high grades had never had never been seen before. Now, this is at the deepest levels of the deposit, and just to refresh our audience's memory, this project deposit mine is 2,000 ton per day, fully permitted, has been on standby for several years now. It costs the company $2 million a year to $2,000 per year, $2 million per year to just have care and maintenance. In some late drilling several years ago, they had nicked some high grade at depth, and so they made a decision, let's kill this beast before we sell it on somebody else who thinks gold's going to the moon. And so this year they launched a drill program to just test these deeper parts, and they have had confirmation that yes, indeed, there is a blossoming of grade, there is a potential repetition of the structure. However, they do not yet understand the geometry of this. They've had some problems with drilling. They're drilling from underground. They have drilling from different angles. They've got 3 drill rigs working there now. They're moving a 4th rig onto the project. So the news, although it produced, 2-3 ounce per ton intervals and so on, did not have the spectacular numbers from September, and it's still not easy to put it all together and be confident that there is something substantial taking place. I personally believe that there is something significant evolving here, and then of course when gold peels off $100. And here's a stock that was, $1 in August and had jumped to $3, is now sort of $2.40, $2.50. It's understandable that people are not using these results as an excuse to jump into the company.
John, thanks for the update.
You're welcome. Thank you, Jim.
We've been talking with John Kaiser from KaiserResearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.